He's only speaking on Fox Business. AI demand is the gift that just keeps on giving. The three stocks on your screen: memory chip maker Micron, CPU and GPU giant AMD, and the king of smartphone and auto semiconductors Qualcomm, all major participants in the AI build-out, all three rocketing to intraday record highs. And with AI data center build-out at a fever pitch, why fight the tape? The momentum trade's still speeding along. Let's get right to the floor show on this Friday. Globalt Investments Senior Portfolio Manager Keith Buchanan, who has a warning about a market that continues, you say, to ignore the smoke from the AI cash burn. Keith, before you get to, just look at some of the S&P winners right now. All of these names are at records. Akamai, Intel, Micron, Dell, AMD, they're all on fire. What is your biggest worry here about, well, keeping with the fire theme here, the cash burn?
Sure, Liz, and thanks for having me this Friday afternoon. We're looking at these names as remarkable runs that they've had, and we're not necessarily really skittish about the story as far as the demand and the revenue coming to their corporations. I feel like the valuation has just been so absorbed in so few names, particularly in the chips names, as you mentioned. All those AI and AI adjacent names really have reconcentrated the story and narrative in a way that just makes us uncomfortable with owning those names that are at the top that have had such a massive run. And we're looking for spaces outside of those that can offer some opportunities for outperformance going forward.
We started to look when we saw that your opinion is such that the cash burn is looking slightly, I'm understating that, excessive, at least with some of the hyperscalers. For example, Meta is spending about $18.8 billion per quarter on AI infrastructure. Amazon says trailing 12-month free cash flow dove from $26 billion to $1.2 billion. Is it going to go cash flow negative next year? And investors don't seem to mind. Amazon's been hitting record after record.
Right. There's an absolute flood of cash into these spaces where they're trying to make sure they have not only the market share, but also the capacity to grow in which they could keep their pole positions in order to drive forward in this race for AI dominance or even and just the market share. So that spend is going to continue. I think we're past the point of where the spend is just astronomical, kind of mind-boggling, to trying to do the math. And the math, getting to return on investment capital is difficult at this point, as we kind of start to understand just how this all comes together over the next 5 years. So I think the math has to start mathing in order for the valuations to keep up. And we just haven't had the time or the opportunity yet in the marketplace to really see that come together. So that's still yet to be determined. It very well could, but the valuations don't imply that there's risk that could happen. So that's what kind of makes us a little skittish.
Here's what I keep hearing from pretty smart people in the industry. They say, I would worry if the demand weren't there and the spend was. The demand appears very much to be there. So many adopters of AI using the chatbots, which of course require data center power. The compute, there just doesn't seem to be enough. And therefore, people say, don't worry. I think it's very smart to, at least look at some of the issues here that the market seems to be ignoring, and perhaps at the moment rightly so. But that said, where would you go if not into this sector?
Well, Liz, that's a great point, and that's why we're actually equal weight. We haven't gone underweight or effectively a short position on these names. Okay. We were long for so many months, even quarters, and benefited from that. We felt like it was just prudent to take the long off and just participate along with the marketplace because of some of those concerns we have. But yeah, it is still by far the best growth story in U.S. equities, and I think it'll remain that way for some time. But we feel like some of the low-hanging fruit is behind some of these names. We feel like you've seen this, the opportunistic space to actually spread beyond the Mag 7 and those names that really have, the forefront of the story kind of in place. Like some of the utilities names have moved as well as like a Caterpillar has moved as well. So we see some of the bleed out into spaces that aren't necessarily tech or consumer services in order to benefit from that adjacent growth that we're bound to see outside of the Mag 7.
Yep, and that would be Walmart and Delta Airlines. Those are the two that you like. Both are off their all-time highs, but still decent performers here. Delta, Walmart, moving in opposite directions, but just fractionally today. Keith, nice to see you.
Thank you, Liz.